All right. I don't even know what day it is. Day of the mentorship, at least. Mentorship notes. Here we go. We are on day 9. Holy moly. We are moving very quickly, which is pretty cool. I mean, let's see. How many days is this? 4 days a week? 4, 16? I mean, yeah, we're pretty close. But today is going to be a good one and pretty important. So I'm glad we were able to get as many of you guys in here as possible. Today's supply and demand. And for supply and demand, just because of how I have it set up, we're gonna use a lot of like QQQ and SPY and equities just to get as many examples as possible. And then we're gonna go over like what they are, how it looks, etc. And then we're gonna go over how to find it. So that's kind of the route I guess we're gonna go today. Is what is it? How do we use it as a strategy? And we're gonna go over that first so that if you want to use my levels, you can just use my levels until you get a feeling for it. And then we're going to go over how to find your levels, right? Because there's going to be equities I don't want to look at or don't look at that you look at, right? But knowing how to do it is going to be super important. If you have my Q-tip charts, which is just the name of it, you should have majority of my levels already, and they should update, I believe. So yeah, and we're absolutely going to be using today's chart as well, since the literal profitable trade I had today that made all the things back came from supply and demand. Some people use supply and demand alone as a strategy, and it is very different than the strategy we've primarily been going over. However, I still use it on a day-to-day basis. Therefore, I want you guys to have it in your arsenal. So yeah, we're going to use today's chart. We're going to use different examples. We're going to use different time frames. So yeah, let's do it. Let me throw in. Actually, I'll hold off on that. Cool. All right. So supply and demand is not these charts. It's actually these charts. I'm going to close majority of these out since I'm done for the day. Are these. Okay, supply and demand is all of my levels that are meant to be color coordinated, but I get lazy. And it's chaotic. Okay, with Qs and SPY, it gets chaotic, and you kind of have to understand how to read it to read this one. Versus if we go to like NVIDIA, okay, it's going to be a little cleaner just because I'm less focused on it. And then I think if we even go to this one and go to like NVIDIA, there's all my high time frame. Yeah, high time frame supply and demand, which low key gives really good examples of like what they are, how to use them. I think even Teak2 has great examples. Yeah, it does. Beautiful. That's going to be one we use for teaching. Screw it. We're going to do this right now. Okay, supply and demand can also be referred to as stair steps. Just like trends and everything else, we are going to have to understand that higher time frames are going to have more and more importance. Is this QQQ copy? No, this is not. I just use this to create a cleaner one. So like if I go to Tesla on this and then Tesla on this one, you'll see the lines are a little different. We'll go daily here. Now the Tesla and that one might be very similar. That was a lot of news. Give me a second. What just happened? I don't even care. Yeah, so you can see they're a little different. Q-tip has more since I'm more using Q-tip on the lower time frames, while this one has more macro levels that I'll use on like positional things, like right shares, structure, etc. So they're very key. And well, what was I saying? The higher time frame, the more importance. No, I mean is QQQ versus Q-tip and Q-tip copy same. Yeah. Q-tip copy is what you guys are gonna have it as. Since you saved the copy as mine, it's gonna say copy in yours. Just like if I copied your Google Docs, or something like something you have in your drive, it would say X copy. So yeah, if it says Q-tip copy, you can change the name of it pretty easily. Just right there, rename. But yeah, same thing, not a problem at all. We are gonna use this one though. So looking at supply and demand, it's like stair steps. Okay, that was how I was introduced to this. Is you got to think about it like staircasing up, right? You have stair 1, 2, 3, 4, 5, just in this example. And it's all about market structure. The understanding of everything of where price kind of consolidates, where it breaks out the different levels to this market. because you have level 1, 2, 3, and 4, arguably, in this example. So when you see a break and retest of a level, that's where you end up making a decision. These are used for pullback longs or pullback shorts, depending on the direction of the trade. Looking at this example right here, we can see we have, let me change that color. I was using that for something different. We can see we had a little bit of consolidation, right? We put both feet on that stair, this one. We kind of held. We broke through it, which was on news. You can see we consolidated again, still no trades. Bam, we retested the highs to carry us up into this, right? And then sure enough, we break it, we retest it, same thing, right? Push higher, bam, another retest, right? It doesn't, the first retest is used for a trade, but like multiple retests you can use for more trades, and it just signifies that we're trying to hold it. We're just, confirming it. And then right here, you can see this didn't play out exactly as a great example, but we see a little hold, failed to push higher. We break down, break in retest, downside. Come up, break, retest, tiny bit of upside, all through. So what am I expecting here, right? If we just saw a break, we might want to look for a retracement to form a break in retest, right? Which, you can see very quickly how this pairs with trends and everything else, right? This is the structure, a break of structure and change of character when we broke back under this green level. Now we're looking for a retracement to create a lower high to potentially short, right? It pairs with everything we've been learning in trends and break of structure and everything, right? You could easily pair this with equilibrium, and ta-da, you can see how this starts to show, okay, maybe in this area we should look short. That is the way I use this, period, okay? The way you can use this to read and understand the market is, in my opinion, even more, if not equally important. Well, equally, if not more important, I guess, would be how you say it. I don't really care. And that's because with shares and longer term biased and predictions, right, when you're trying to figure out, okay, over the next year, I think X, because, which take two was that. I mean, my position was here, and it was because of multiple things. But if I'm entering in this range, I would ideally want us to break above it, or at least maintain this level, because a break back under this level puts us in a lower stair, in the lower level, because you have 1, 2, 3, and 4. If I enter in 2, I want 3 and 4, right? That's how you have to think about this. So let's go to Q-tip. Put this back on. It doesn't matter. We'll go to Q-tip, and we'll go to SPY. SPY is rough, clearly, right? I mean, it's hard to read. But if we look, now you're gonna have to work with me here, okay? It is Q's might be cleaner, low key. We're gonna have to recolor a lot of these. So let's go 4 hour. If you look, and this is again macro, 4 hour. Let's just talk about a macro for right now. We can see this golden level, which is about to be golden, was a pretty massive step higher in the market. And we have started to, channel and range on the macro up here, okay? If we broke down under it, we would probably break lower into this level, right? So you can use this to read where the key breakdown spots are. Now, we're on a 4 hour, so we're looking pretty largely. However, looking at, let's go 1 hour and zoom out a little bit, if I can fit it all. It's rough, so bear with me. But this right here, I would also signify as golden. Because look at how price came up. We respected it, hit our head a couple times here. It's going to sound crazy, but it simply just looks like a step to the upside. So then that's the dividing point between this level, right? Now, overall, it's just knowing cues and being around this so often. That entire level everything from 619 to 613 could be considered one giant level, because everything in there, you can see we straight up, straight down, straight up, straight down. Pretty much this is the one time we consolidated, two time we consolidated, straight up, straight down, straight back up, because we're gapping, pop down a little bit. That was a trade that I had been watching, a failure break and retest under 618 just the other day, straight back up, straight down. So you can see in this area, we move very quickly because it can be basically an entire level. It's no man's land inside of no man's land. I don't know if that makes any sense. So knowing this, anything under 613 would be considered this lower half. Anything above 619 is the upper half. Upper half into all-time highs. Okay? It's all used on reading the structure and roughly which side of the mean is price on. And this can be used for forming bias again, right? So if we remain under 613, my guess is we're going to see more downside. If we reclaim 619, a key level, a golden level, we're likely to see more upside, right? So far, does that make some sense to you guys? And I know I just rushed, like basically ran through that. So if it didn't, great, let me know. If it does, cool, let me know. If you have questions, cool, let me know. How do you make the bars? And we'll get to that in a second. I just want you guys to understand. I see some are whiter. Yeah, absolutely. We'll get into how you draw these out in a second. I know that's the magic. I first want to go over my head. No worries, dude. I'm glad you mentioned that. But I want to make sure you can see how to read it. So let's go to, let me find a decent example. Low key, take two is just a great example. Let's go, gotta find a good one. Tesla might be decent. Tesla way back when, but I deleted everything. There's so great. Unless it is on this one. Yeah. Okay. We're gonna have to use Tesla for this one for a better understanding. So under 270, this golden level, we are in the lower quadrant, the lowest of low, right? This is currently our ceiling, our cap. So if we remain under it, we can understand price may stay heavy, we may stay weak, but until we can break above it, could we free up some space to move higher, right? We see the break-in retest over 270 right here. I don't know if you guys can see exactly where I'm pointing. 270, perfect break-in retest. I mean, this is textbook low-key. Bam, we rip. Then we push up over into what was previously also a very textbook trade, into this new golden level. Wow, that is bright. So there's your quadrant 1, quadrant 2. We get over that, and we have just gone straight up into what I would call quadrant 3. I don't know for a fact that this is like correct, but I'd say it's pretty correct. Right, we come up here. These golden levels, if I delete everything else, just looking at the, god dang. If I do this and this, just looking at the golden levels, ignore these two. I can delete actually. You can see how we've staircased higher in the different quadrants. If it retests, is a retest if the day wicks down. It can wick, absolutely. We'll get into all of that in a second. I just want to go over how to read this to understand a bias, right? So right now, if we're coming off of 488 and we failed getting over it, I'm probably a little short out of it, right? I also see that we just smashed through, leaving behind a no retested level. So a retest of that could be really good and probably incoming, right? Because look at all this. We smashed through, I'm going to find an example. Smashed through this, we ended up retesting it, okay? We smashed through this, we retested. So when we smash through this, how can we not expect a retest? I mean, even to the downside, smash, retest, okay? As far as actually breaking and retesting, it does not have to have a candle close into it, okay? Because you're looking for price to claim and confirm, okay? So right here, we come up, Price confirms it. So intraday, you could have probably caught, and based on how this candle looks, it opened up here. We dropped lower into the 270 level and found buyers to push us right back up. We closed, bam. Okay. So we can confirm just intraday that there was a trade there. But the next time we retested it, we opened, dropped down, found buyers, pushed higher. Look what happened again. Come down into it. We opened, probably dropped while we opened basically at it. Price held it. And then the next day, we can really see we open, drop back into it. Bam. If I go to the 4 hour, get you more information on that. You can really see how price was holding that. Because in the logic behind this, that's really what, if you guys can understand the logic, you'll understand how to use this. This was previously sellers, and this was previously buyers. Okay. Trench warfare is going to be key here. I want you to think about an army and bases, right? Your military's base. We're battling between the two bases. No man's land is literally in between them. Buyers push through and take over their base. We took over the sellers. At this point, we are retracing and creating the break and retest to set camp up, right? So when we get over it and start to hold it, it is now buyers' territory. And sure enough, we continue to progress forward. We move the front forward to take more land or more whatever, right? To claim more for buyers. And it's okay, because look, just like if we come up here where sellers are and we get smacked, look at where we retrace to find buyers. We go back to camp to regroup and come back higher. I should have made that red. That was what I was trying to do. We come back, we regroup, we battle some more, bam, we take over. And this, we haven't quite retested it yet, so we don't know for a fact that we've set up camp on the daily chart, but this absolutely is probably a place of retracement where buyers would want to maintain. Okay. What this looks like on an intraday, we go Q-tip, let's go 15, we'll go 5 minutes. Look right here. Price was holding above 613 for a little while. Okay. Now the reason there's other reasons I don't want to get into. But look, when we broke down under it, we came down, retested it, and pushed lower, taking what used to be buyers, turning it into sellers. And then we progressed down. Look at what happened when we broke through this. What was previously buyers, we push under it, we get a break, followed by a break is a retest. We retest that level, push down lower. And sellers are trying to take control. So they want all of this to be theirs, and we will progress lower until X happens, right? Let's go find another example of a break and retest. Even just a retest, right? So look, we got a little break here. Now, this is arguably a retest, but just to say it's not. We get a break. We come down, retest. Find some buyers. We see a break. We see a retest. We sell off. We see a textbook break and retest right here, right? Even though we broke it here, we tried to retest it and we failed back under it. Then we tried again, break and retest, upside. We broke above this one, retested it, bam, right? I'm not saying we're looking for crazy confirmation. We fell under it, reclaimed it, break and retest, upside. Look for some downside. Speak it into existence. Textbook. This literally could not be any better. We've held it. Buyers would be here. Pushed higher. Found sellers. We slammed back through it. We retest 618 because we want to claim what used to be buyers as seller territory. And we drop lower. Okay. So that's how you use this. Break, retest, bam. On a higher time frame. I mean, they're literally all over the place if the levels are right. And we're going to get into how to do that. There's one right there. Break, retest, bam. Nothing day. And it's not always perfect. Right? Sometimes you will see failures. You'll see them perfectly. Break, retest, bam. Right? So, it can be wicks and Candles can close into it as long as you don't, just like fair value gaps, as long as the candle doesn't completely close on the other side, then you're good. Even if we come up, respect it, and get a little wick on the other side, it's still valid, right? Just like fair value gaps. Okay. Now, to enter some of the things I want to go over, and we'll go back to today. Let's go 2 minute. I like the 2 minute with the supply and demand. I don't know why. Personal preference. You can do it on the 1 minute. So look right here. We can see low, 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 low. We break through the lows. We retest it. Short. Now, just like everything else we've learned, you don't want to enter on the first touch, just like you would on a fair value gap. You don't want to enter straight off the fair value gap, right? You want to wait for some type of confirmation. It's the same thing here, okay? So we see breakdown or retracement for, we're in a downtrend, down, retracement. Ideally, you would like to see some, confirmation, whether that be a break of structure or, DOM stuff. If you see a failed hoorah, which we'll get into this week, some weakness visually with the wicks and whatnot, you have other markets getting weak, correlating markets getting weak, right? You would want to wait for some extra confluence, ideally. You don't want to enter on the first touch because then you're here. Are you going to be able to sit through all this? Okay. So that's how you can use it. Or, let's right there, bam, break and retest. You see a little baby retest. We kind of hold it. That's absolutely a long. That's absolutely valid. This is not valid. We come up, we close into it, we open, a little bit of strength. I wouldn't say that's enough though. We didn't break structure. We probably, I don't know if we have correlating assets. I'm not going to go check. So I'm not entering there. Sure enough, we fail. More weakness. We try again. You get wicked out or wicked entry or faked out, right? Because you didn't wait for the candle to close. Straight back down. And then you fail. See right here? See the difference between the two? Read the story between the candles. And for the rest of that day, we held here, 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 here. You might go, oh, wow, but wouldn't there be something up there? Yeah. Look at where that line comes from. That was Wednesday's lows. If I go back to the 5 minute, right? So there's absolutely a supply and demand level right there. Now, Sam, why did you grab that line right there? How did you know that was a high? Look over here at the start point. Where did price first start to find buyers? There, 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 and there. Technically, you could actually draw it up to here, right? To include that wick. Personally, I like to make them flat and understand there's a little bit of wiggle room, like make them even numbers and understand there's a little bit of wiggle room on either side. So I like 615. Okay. And then sure enough, ta-da. Never got a retest, never even got a closure above, and we got rejected off of it. Right? Now, let me make sure I've gone over everything. Okay. Levels are going to be paired with everything else. Okay. That's how I look at them. They are, again, assistants. This is like a backup to my main strategy. Okay. And this is entirely a strategy on its own. For a long time, this is how I traded 0DTs. This does work, and this itself is a strategy. I currently use this as last resorts. So if it's like, we're chopping right here, okay? If we can see that it's a push and pull day, aka this morning, I either want to be long above 615 or short under 612.5, aka this entire range that is now in blue, I want nothing to do with. Yeah, I know they're all messed up because of some BS I did. You probably don't have them on SPY either. Try that. It's because I did something at one point and screwed them all up. And I have no idea what I did. Anyway, when you see a push and pull day or consolidation between it, you absolutely can channel trade. However, chop is not your friend. Trend is your friend. Right? There's your structure. I want to see a break of structure and retest for a long, or a break of structure to the downside and a short. Right? So this leaves me unbiased ready for whatever is to happen. It can go higher, great, there's an opportunity. It can go lower, great, there's an opportunity. Okay? So you can use that in the sense of, I'm going to sit and wait for a breakout, which is absolutely what I did today. Well, I didn't wait. So I tried twice, but it failed. And then I waited, and guess what happened? Bam, make back all my losses. Okay? Now, so far over how to read them and how you use them. We're going to get into how to draw them now. What questions do you guys have? You read? Any questions? Okay. Cool. Cool. The only last thing I want to say, real quickly, is you can use this for morning bias as well. Have we gone over biased already? I don't think we have we? Ah, that's tomorrow. I'm either gonna give you like a little sneak peek. I'm gonna give you a sneak peek. We'll go over more of this tomorrow, actually, funny enough. So you can use this just like liquidity. Remember? We like to see manipulation. We can use SMTs and liquidity and all these fun stuff to figure out a daily bias. You can use the exact same, you can form a bias with supply and demand. So let's find an example real quickly. We got to find a market open. Bang. Okay. Market open. As we're approaching market open, we can see we are right under 629, 628.5. Okay. So in my head, there's one of two things is likely to happen here. Likely. You're either going to get a break and retest over 629, and we're going to go higher for the day, or we're going to get smacked down out of 629, and we're going to go down for the day. There's your bias. Okay, let's find another example real quickly. We got to find market open. Okay, right here. This could be a decent one. We're kind of close to it. 624. Okay, if we get to 624, one of two things is going to happen. We're either going to break above and like hold the level for more upside, or we're going to come up, get our head smacked, and see downside. Bingo, this is perfect. We came into the day, we're sitting literally inside of 619 after a failed breakdown and then a recovery, a reclaim ripper is what I would call that. If we can get over this and close above 619 and show visual holds of 619, I'm going to believe in upside. Okay? Bam, upside. And I know you might be like, well, Sam, this is easier in hindsight. I don't give, it's really not complicated. We just saw a massive break on Qs. We have, during pre-market, retested 619. Break, retest. If we hold above 619, we're probably going to get some upside. However, if we fail under 619, we'll probably see gap fill. It's exactly how I would set that day up, and you get one trade and two trades that works out perfectly. You can form daily bias simply around these levels because it's a map. Okay, it is a structure map to reading this market, in my opinion. And that's one of the reasons why I love them and why I go over them every pre-market. Right here, bam, we're stuck under 610. If we fail 610, we go lower. If we reclaim 610, we probably go higher. Crazy. And then we watch 613, and then we watch 606. Okay. Same thing here. Market opens. If we fail under 613, we look for downside. If we hold 613, we look for upside. Start talking like that, you're going to sound like trying to make it, because it's pretty much what he does. Really not rocket science. Okay. Now, fun part is kind of over. So before we jump into the second half, which I'm actually making decent time, I want to take some notes. Okay. How was I doing the notes in the previous? Okay. So 1, supply equals sellers. And this will make sense. I'll give you a little way to remember this. Demand equals buyers. Okay. Easy way to remember this. Is there a U in demand? No. There's a U in supply. Supply means up, right? U, up, you get it, right? Cool. Is there a D in supply? No. There's a D in demand. Demand means down, down. Pretty cool, right? Literally remember that D and U, and you, ta-da, you can use the terminology fine, right? You'll get them slipped up. You hear me all the time. I'm like, oh, if we hold supply and we're holding demand. Okay, as long as you understand what they are, the terminology really couldn't matter, but it's an easy way to remember it. So if you're having a conversation, you can speak correctly. U for up, above, supply, D for down, lower, demand. So if price is higher than a level, that makes it a demand level, demand zone. If price is lower than a level, it is supply because it is above, it is higher, up, right? Pretty easy. Okay. Trades come from break and retest of the levels. Super important. Okay. Typically, keyword, you will see a retracement leg of a trend form the retest, aka continuation, right? Pretty cool. Trades can also come from holding the same level, come from, I guess, holding a level, right? Very noticeable. I'm pretty sure I spelled that wrong. In shop, right? You can see there's a high and there's a low. There's sellers and there's buyers. We are simply going in between. Okay. Think about supply and demand as trench warfare. And we'll get more into this at another day, low-key. I think it's actually a day this week. Yeah, we'll get into that on Thursday. Yeah. Trench warfare. Okay. Also, can think of supply as there's a lot of shares up here that people are wanting to supply into the market. Yeah. That will keep the price from going higher until supply is exhausted. Yep. Demand, there's demand for a lot of shares here. People will want to buy them. That will keep the share price from going lower until demand is exhausted. Yep. Notice how eRed is exactly spot on. If you want to copy and paste that, put your notes, I wouldn't blame you. But notice how he says exhausted, right? They're limit orders sitting in here. Okay, everybody hopefully knows what a limit order is. It's an agreement or an order you place that if price hits X price, if the stock hits X price, I will buy or sell. Okay, I want nothing to do with it until it hits the limit price, the price that I want. Okay, many institutions and very, market making tradings like Warren Buffett has openly expressed he uses limit orders. He has orders on basically every stock that he wants to invest in, and they will stay there for decades because that is what he wants to pay. He will not pay any more. That is his limit, and he will wait. Okay. The same thing is here, just on a micro scale. People want to sell their shares at 615. There's limits to sell their shares here. Every time we tap into it, order filled, order filled, order filled, order filled, we start to move down because selling pressure is highest. Then if we drop into 613, at that time, we still have demand. People want to buy those shares. So we see order filled, order filled, order filled, buyer buying, 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 price comes up. In here, when you see chop, this in this example is perfect, chop between two levels, you're waiting for one side to lose. It's a boxing match. You're slugging each other until one side becomes exhausted or blacks out or, gets knocked out. And that's exactly what happened here. The buyers got exhausted. The buyers got knocked out. Bam. And we ended up going lower. So exhausted is a perfect word to think about as well. Okay. Thank you for using that, eRed. I really, really appreciate that. No man's land is in between. A great tool for forming biasm. I don't honestly know if that's a word. Hopefully you understand what it means, right? It's a great tool for forming bias on all time frames. If you want to use correct grammar, go nuts. That's what I would write. Um, great tool for predicting. I guess that, well, that's pretty much the same fucking thing as forming a bias, isn't it? Yeah, yeah. We're gonna leave it at that because I was gonna write like great tool for reading market structure, right? I mean, I guess you could put that. A great tool for reading macro market. You know what? It's all market structure. Market structure, which is basically the same damn thing as forming a bias, but I just blanked on how to spell structure. So pretty much the same thing. If you want both, great, have both, right? Okay, supply, sellers, demand, buyers, as eRed share, great example. Trades come from break and retest of the level, so a break above or break down. We wait for it to retest that level. Bam, you can look for an entry. Okay. Typically, you will see the retracement leg of a trend. We've gone over this already. Downtrend. You have a move lower, slight move higher. Move lower, slight move higher. Okay. On those retracement legs, you typically will see the retest of a level being formed. This is trading continuation of a leg or of a trend. Okay. Trades can also come from holding a level. So if you see it like bouncing off multiple times of, let's say, 610, right? We're just sitting there bouncing, right? You absolutely can try to scalp a trade off of 610. Understand though, these are lower probabilities than a break and retest. Why? Because that is chop and this is trend. We should already know that chop is not your friend and trend is. Cool. To think about supply and demand logically, let's understand that it's trench warfare. You got buyers and sellers on one side, and they're going to beat the shit out of each other until one side wins. Then the market's going to move. Pretty crazy. Okay. And then, of course, it's a great tool for forming an idea on any time frame and understanding market structure. Cool. Any questions so far before we go into the second half of this call, which this is going to be a long call, guys. Market's going to close. All good? I'm pretty sure I already asked you at this point, but I want to make sure you guys are good. Coolio. I'm gonna let you type, gamer. Cool deal. All right. Now let's go into the fun shit. I'm trying to think how to explain this. I think I don't have anything on test, do I? No, everything should be clean. Let's go SPY. Cool. All right. So just like everything, top-down approach is key. Okay? Literally just remember that. Top-down approach. You want to go from the higher time frames to the lower time frames. You don't want to go from the lower time frames to the higher ones. It won't make no sense. You want to go from top to down. Bird's eye approach. Okay. And we're going to use this daily time frame as an immaculate example. And I believe this should be November somewhere in here. Is that April? Yep. April. Where's November? Yep. Okay, so it's all in here. Yeah. I think it was. I could be wrong. All right. We are going to start. I'm trying to remember because all my charts are different now. All right, we're going to start with that high. Cool deal. All right, so we look right here. Okay. Find a high of a trend. We're going to go to a weekly time frame. I mean, seriously, you can start as high as you want. Weekly time frame. Let's start with this right here. Okay. At the start, I just want you to mark out key levels that you notice on the weekly time frame. Okay. Key pivotal moments. Shit, I see one right there. I'm not going to neglect it. I see one right there. I see another one right here, right? And then we could just literally continue marking the highs all the way up, okay? And right there, you can see where we're going to go. You can already start to see how this forms. Go to our lower time frame. And I want you come back here to the start of the point, grab a rectangle, which if you don't know where they are, right there in trading view. Grab the pretty much the higher where that put the line at. Go ahead and draw the base. Okay. We're gonna tweak this. You zoom in and you like decide kind of where you want it. I typically like to include the wicks. Okay. Wicking on a higher time frame is going to signify sellers were here, price did not want to stay in that level. Okay. We did not want to stay in this because selling pressure was so high. You're just constantly order filled, order filled, order filled. So where do we see wicks? All in here. Okay. On the daily time frame, you kind of want to be generous. I would typically say if it's most levels should be between no more than $1. Okay. That's like your max, unless it's an exception, right? If I wanted to go to Qs and mark out that entire 613 to 618 and say that is one big level, you can do that, but understand it's an exception. Okay. Understand that. Typically levels are going to be no more than $1 of width. Okay. Why is that? I have no clue. Okay. That's just how I use them. And a lot of the times $1 is genuinely too much. So right there, I'm going to take this and I'm going to simply drag this all the way left. And I'll give you a trick. Scrunch your chart up, grab it, and go like that. Okay. And then, you just fix the chart. Bam. And look at how this reacted. Right there, you can see price came back up to that level we tested. And we started to see more weakness. Okay. And these you can tweak, guys. You don't have to draw it once and forever leave it the same. So I see right there, 77.5 had some weakness. I'm going to come in here and we're going to go 77.5. Let's include it. Yeah. I didn't know that, but yeah. Right. So you go here and then you said into settings. So settings, style, extend to the right. Cool. Right. I honestly didn't know that, so that's pretty cool. Okay. Let's go to the next one. Key point right here. Bingo. Okay. Look at this. I can see already this wick. So let's take that as a low. Let me try and grab it. It don't have to be perfect. If you want to be perfect, use a magnet. Drag it to the line. Bam. And you could do what I do, or you can do it ABC mentioned. Either one's fine. Let's keep going. I mean, seriously, and you can get to the point where you just literally copy and paste these levels. And you like, look at this. Oh my God, this was the amazing trade I was looking for. I think this is the start point of everything. Look right here. You can clearly see holds, 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 seller, 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 right? Prices all around. We break above it. What do we create? On the smaller time frames, we create a little supply zone. It's not as big because we're really going in. Now this will do more on the 4 hour. We're going to change time frame just so I know. Color. We see a break and retest, a push off. Look what we retested. The highs. Got to push off. And this was Trump's inauguration or election right here, which was also like absolutely a fabulous trade. There's so much education looking at the day after election. Wallen, I have spent so much time going over that with Wallen before. So much. Once you mark out this high, if you want to copy it, it's 586. You can make it flat. You can do 0.12. You can do whatever you want. Go look back at November 6th if you can, and go look on the intraday. There's so many great learning lessons in that. Okay. So we break, see a retest. Bam. Okay, let's just keep the system going. There's the high. Look at kind of how price reacted once we got up into it, and it's going to start getting smaller. And then look, oh my God, I remember this. I'm getting PTSD from all of this. Look how far it goes. Look at this break and retest right there on the 4 hour. Bam. Okay. So top down approach, find pivotal moments, right? Highs of trends, lows of trends. Mark them out with a line. Go like zoom in on the start point and all of the points that it's touched, relatively touched the line. Draw a rectangle. Notice where sellers are stepping in or buyers are stepping in by the wicks, where price refuses to stay put. Okay. And there you go. So you draw it. Okay. It's really not complex. It's going to take your time. It will take time though. Like no bullshit. it's going to take time for you guys to get the eyes to see it, right? I mean, I'll go to a random ass chart. I haven't looked at Home Depot in so long. Instantly. Bam. Like, it's just second nature to me. You can instantly see how we had a key pivot, got above it, and we started to hold above it. Look at that. That's a nice head and shoulders. We broke down. Bam. Draw this all the way out, and look how price... Bruh. I literally had no idea. I shit you not, I had no idea this was that perfect of an example. Right? Daily time frame. Notice where price is kind of, you know, doesn't want to hang out around, where the structure is. And ta-da. Okay? So let's find a low one. Let's find a demand. Down there. Clear as day, right? You see the hold? Great. It doesn't have to make sense at first. Why is it holding? I don't fucking know. I want to take this wick. We've clearly found buyers here, so I want to include that. And then go to the lows. And simply drag. Look what happened when price touched it. Kabam! Look at when price got over this. Break and retest. Bam, let's go to the highs. Okay? Now the highs are a little complicated because it's the head and shoulders. There's your highest point. I think that's pretty pivotable. Pivotable? I think it's pretty important. I'm going to take this. Grab that exact high again. And now here's where things are going to get big. We're on the daily. Clearly, price does not want to be anywhere in that area, right? You see wicks here. We came up, just instant rejection. Drag it out. Bam. We also see we have this little head and shoulders, right? So you can mark out the highs here as well. If I can grab them for Christ's sake. And you could do something there, right? Ta-da. Okay. Someone give me a random ticker. Let's go TSM. I haven't looked at TSM in a minute. I don't even think Q-tip has relevant ones. Right off the rip. Tell me you guys see it. Do you see it? Yes or no? Where should it go? Gamer, tell me right now. Where should it go? 310. If you got that to the cent, I'm going to be impressed, but I'm sure yeah. Okay, bingo. Yeah, I'm guessing that's what you're talking about, right? You are correct. Bam. But look, we had a little wick higher. I would ideally like to include that wick. I'm not going to lie to you. Okay. And you can tweak it. So maybe it first starts here. And then you got a little wick above it. Maybe you want to edit it. Okay. You're absolutely able to, guys. It's not draw once, let it sit. And you don't really get a retest. I'm curious on the 4 hour if we retested it. Nope. This 4 hour is going to allow you to see the after hours and get you a more precise. Okay. Ta-da. Okay, what about the downside? 270 for below. God, you're on it. Let's see. 270. Yeah. Look at that. You see this right here? Look at this. I didn't even notice. My cursor was already on it. Bang. Okay. I want to include where buying pressure is. Okay, that's where they first started. And I'm going to go ahead and include all the lows. Okay. We can always tweak it. There's your structure. Look at that. Now you understand where price was consolidating between. Until price broke above 615, we wanted to be cautious of upside. So if we use supply or premium and discount like we did with equilibrium, where do you want to be? Actually, let me flip this. Where do you want to be long at? And where do you want to be short at? Okay, you ideally want to be short in the red and you ideally want to be long in the green. It is ironic that that is perfectly the 0.79 retracement. But that is like this is a premium. You want to sell in a premium when things are hot, right? When we're at all-time highs. Ideally, you kind of want to have a little bit of a short bias unless X is out there, news, catalyst. And when we're at a demand low, we ideally want to be looking long. We're in a discount, okay? So that terminology and all that doesn't really matter, but you just want to stay away from being in the middle, okay? So let's go back to, I think we were started on SPY, right? Let me put this on. Actually, I can't really put it on replay mode because we're kind of far away from it. Let's see if we can. I don't know how far back I can go. Okay. So look at this. We already started drawing these levels on the higher time frame, and look how perfectly they translated. Look at that. Clear high, break, retest, upside. Started to see where the ceiling was. confirmation, confirmation, you could absolutely start to short up here. Bam, we're back into demand. We should probably be looking for longs unless we break under it. Bam, we're long, back up into the highs. We break, we retest, we short. Bam, you're back in the lows, okay? Now, this is election day, and they're technically on a 15-minute chart. There is a break and retest back over 575. If I can go that low, I'll prove it to you. Like, that's how much I remember from this. Yeah, look at that. Tell you a funny story. I knew election was at night. I saw this set up, and I go, dang, do I want to gamble? And I didn't. I truly was like, this is going to be a long, but I don't know if I should gamble. I remember it so crystal clear. And sure enough, I remember seeing that market that night, and we shot up. And look at what happened. The previous high, we broke through it. And this is what I meant the day after election. You can see there's a lot of learning lessons here. We came down. Hold, bam, aka buying pressure, right? You can continue to do this at all-time highs. Mark out the all-time high. Take a little level. Where do we see buying pressure? That's the high. I see buying pressure pretty much like all within here. Or I guess selling pressure for this matter. We get a break and a hold above it. Upside. Trend, all the way up until roughly this high. This is where when you can include after hours, it tells a bit of a story. So these are some of the times when examples or exceptions happen to that. They're typically $1, 50 cent, 25 cent levels. I don't know why. Okay. I don't know if it's just something my OCD likes. I don't know if there's a rhyme and reason behind it, but that's just what I found to be true. So this is where an exception would be. I want to include the after hours high or the pre-market highs. However, clearly we can see selling pressure all is at 599. We break down, okay? Does anybody other than Gamer see where the bottom demand zone should be roughly in here? And I know the numbers don't have to be precise, but does anybody roughly see it? If no one answers, Gamer, go nuts. Because clearly this is like, you're understanding this perfectly. We'll drag this out while I wait. 595. It's funny, I know exactly that is a level. Literally 595. ABC, did we trade together? Were you with me in Cashflow Cartel? Wow. Yeah. 595, give or take, right? Or you could even, right, let's say you want to include this low. What is this? A little pivotal moment. Take note of that, right? 595 is absolutely a level. All of this is a little bit of a level, okay? It's funny because for a while, my golden levels were 595, 585, 575. All right, I have no idea why, and that's why I asked you if you were in the Cashflow Cartel. Yeah, look, 585 was what I had, and then 575 right there. I have no idea why it was that way, but it was. And look what happens. We draw these out, okay? And these aren't going to be perfect, okay? Price isn't going to perfectly respect them. It's this damn stock market we're talking about. You're going to have to use a little bit of common sense and understanding on the, you don't want to zoom into a singular candle and be like, oh my gosh, we broke below it. Guys, relax, okay? That's what I would say to anybody. Let it breathe, okay? You got to see it's two-step confirmation. You got to see a break and retest. Seeing this many holds, maybe you tweak it a little bit. Maybe it's like, okay, I see a little bit of buying pressure in here. I see a little bit of a retest there. Maybe I want to move this up a little bit. Because you, guess what? You can tweak it. It's the crazy part about having your own charts. Is it good to take a few days based on daily levels? Yeah, it's a great idea. That is an absolute phenomenal idea. And like, so when you're on the daily time frame, let's find a decent example real quickly. Because it's a fabulous question. Right here, this was a trade I took. I shit you not. And look at that, 565. I'm telling you, I have no idea why it was like that, but it was. Break and retest, right? So we clearly could see that we were retesting this key level. I don't want to take a 1DTE. I might be able to catch the first day, the first move off of it and get a couple percents. And there's nothing wrong with that. That's a great trade. However, I want to see the full breakout. I want to get in here and sell there, no matter how long it takes. Maybe even sell above and trail it. So taking a week or 2 weeks or even a month out over these key daily levels is going to be a fabulous idea, right? So yeah, absolutely. Hopefully that answers your question. Cool. Right, and look how this level we marked up here at 601. I don't remember when we did this. Actually, that's orange. Yeah, breaking. I think we already went over that. I don't. My brain's kind of getting cooked. Cool. Yeah, it makes playing options very, very fun. Yeah, absolutely. And that's why every time you see my charts, I have ES and SPY, and this would be in Q. It's literally set up this way, and then QQQ is so that I can sit here and watch the thing, right? It's so that if I see something up here, it's great. I can see the supply level and demand levels, and then translate that over to NASDAQ, right? Because they're correlating assets. APLD. What do you want to go over another one? APLD, is that actually a ticker? Okay. I was gonna say, if you want to, someone pick a random ticker, we can do it again. I mean, it's like Apple, right? And look, you already can see I had something going on back here. That's kind of funny. God, that would have been a nice trade. Clearly, we have something here, something roughly here, and I'm literally just looking at this side of my screen. And then we would have clearly the high right in here. Take your level, mark out where the buyers are and the sellers are. You can copy and paste the levels to make it simple. What I'm doing. And we failed under this, and that's perfectly okay. And ta-da, there's your structure. I mean, guys, it's like, that's it. It's so simple. And drawing the levels is not rocket science. Let's go QQQ. Hopefully it's clear. Yeah. So now, am I still in replay mode? I am. Oops. We were looking at Apple way back when. Okay. So let's look at QQQ, and let's go to the 15-minute. I'm gonna get rid of all of this. I already know where everything is. 15-minute. We're gonna start on the 1 hour. Okay. Down on these lower time frames, you're gonna find a ton of levels. Can you try D05 next, please? What is that? D05. Oh, is that even a public chart? Oh my god, it is. Yeah, sure, why not? I don't care. I used to do this. I literally used to like live stream and be like, yo, name a ticker. Ooh, this is rough. This is rough. Start point, clear. This is, look at that. A little break and retest going on up in here. Break and retest there. And then you get in these uptrends, and they're ugly on the higher time frames. You got to go to the lower time frames and try and mark them out. Right, so right here, you definitely can see some buying pressure and selling pressure that flipped within whatever range this is, 56. Right, and we got a little bit of something or another up in here. Another hold spot. It's gonna be, this is rough. I'm not gonna lie to you. ABC, this is kind of rough price action. This reminds me of Alibaba. So that's how I would set it up. So when we broke above these highs, I would have looked for a break and retest of 58.8. And if we got a hold, definitely could have been a long. And you can see we even tried to hold it. Yeah. Why is my phone blowing up? That's Twitter notifications, which is news. So, there you go. And then let's go back to Qs, and let's go to the 15-minute. Right, and it's the same thing on all time frames, guys. Right, this is from today, so we've already gone over this. Right, ta-da. Okay, look up here. Okay, there's clearly some ceiling-ish things going on up here. You could easily, you know, mark this entire area out. Say everything up. You could even go all the way up into here. Everything in that $2 range is sellers. Funny enough, look how perfectly it aligns with over here. Just keep going. I'm curious. Can we reverse engineer it? Kind of. Right? You can really start to narrow things down. Does this make some sense to you guys? Bam. Here's a like structure level, right? We are holding. And look at what happened. This is, I mean, they're probably going to be roughly the same on both charts now. But break and retest. Break and retest. And we're reverse engineering these. I mean, funny enough. Some cellular pressing there. Yep. Cool. Okay. Then I'm not going to continue going on in examples because I can do this for hours. And I have. For more hours than you can imagine. So, what questions do you have on how to use them, on how to draw them, what they don't work on? I mean, literally any questions. And then I'm going to share one more thing. I'm thinking we should look at other confluences as well with these, like not alone. I agree. Yeah, absolutely. Absolutely want to do that. Right? So, for example, we see weakness here, right? Cool deal. Let's go look at, actually, we'll just use this example. It's already pristine in my opinion. Right, high of day. Could we have used other confluences? Maybe. There's a liquidity sweep of day high paired with an SMT between ES and NASDAQ. So right there, you got a little bit of bullish confirmation. Okay. You see sweep impulse move, right? There's technically an order block in this range, depending on how you want to draw it. So there you go. Order blocks and supply and demand are very similar. Okay, very similar. So I absolutely, yeah. The more times you can pair confluences, the better. Period. It's that simple. The more confluences you can pair together, the better. Do you use, say, weekly levels and trade on the 5-minute? I like to have them all, right? Because let's say I have a daily time frame level. The 5-minute is still going to react off of that level. Okay. If I have a 15-minute, the 15-minute level, the daily time frame is still going to react off that level. Okay, because it's all the same data, just changing how you use it. On the contrary, though, I do think the daily and 4-hour and weekly and monthly and 1-hour levels are more important than the 1-minute levels, right? And drawing levels, guys, I really wouldn't go down to the 1-minute. I mean, transparently, I think 5-minute is really pushing it, and that's going to be primarily for like intra-week, intra-day. And then I would say like 15 minutes, probably the sweet spot for the low. Like if you're looking for like levels intraday, intra-week, intra-month, then 15 minutes going to be your friend, right? Yeah. But yeah, I mean, the more confluences you can pair with it, the better. So, I mean, I had a short biased all morning, and we were chopping in here. We have the SMT. I don't have an A plus setup liquidity sweep, pull back to fair value gap, or equilibrium in this move right here. So it works out. We go lower, and I get a break and retest. Now that's formed with my daily bias, with the SMT, with potentially what could look like a head and shoulders if you were blind, partially blind. So I took this trade. I mean, I'm going to tell you straight up, I took this trade. Now, in that moment, were there confluences aligning with it, like a fair value gap? No, there was not. I mean, if we go look at the 5-minute, there's no fair value gap. Okay, it's just a retracement of an extension leg right here. Okay, there's no fair value gap. And that's the trade I took. Did I have a target set at equilibrium? Or not at equilibrium, liquidity? Yeah. Why did I take that trade off early? Because ES had taken its liquidity. It took out its version of this liquidity and then kept going and took out some of this shit. Okay? I believe that's the trade. Oh, I'm on the 5-minute. Yeah, that makes sense. So yeah, you still can pair it with other stuff. This is the entry. Go lower. It swept these lows, stay lows, and I was cool. I kind of want to be out. I was up good money. So right? Still, you can use this stuff for other things, right? And break and retest of day lows right here, bang, downside. Okay, so you can use day low and day highs as supply and demand levels, absolutely, as well. Now, one of the things I want to share, and we'll go side. Actually, I can just go up and down, can't I? Yes, I can. So look right here. We look at 613 and 6. We're going to call them 613 and 615 as these two levels. We go to SPY. We have 84, and technically 84 is equivalent to the 13, and then this is comparable with 15, 615, right? Because this is Wednesday's lows, and this is Wednesday's lows, right? So the correlation between the levels would be like that. If I look at Qs, I see 613 is trying to hold up this market, while 684 is trying to push this market down. Occasionally, you will see days like this. You will see where you got a push and pull day, as I'd call it. One asset, SPY, is getting pushed down under a level, while Qs is trying to hold above a level. Okay? What you do in this position is treat it as chop. So, for upside, I would ideally want SPY to break above its ceiling, 684, and give me a break and retest to free the entire market up. For downside, I would want Qs to break under 612.5 and give me a break and retest. Okay, you simply sit back and let the market fight without you. You don't have to be in the fight. You sit back. If it's push and pull, which results in chop, let it chop out. Let it play out. It could take minutes. It could take hours. It could take days. Sit on your hands. Let them fight it out. Let them sock each other in the face. Somebody's going to get knocked out. Somebody will lose the fight. And then we step in. Third party this shit. Okay? Sure enough, we break down, right? We have the weakness. We break and retest under 612. That frees SPY up to the downside. It frees NASDAQ up to the downside. Downside was speaking volumes here. Bam, downside. Okay? So if you see a push and pull day, SPY's holding under, Qs is holding above, don't get in it. Let them fight it out. You step in once there's been a winner. Okay? It's really, really that simple. Funny enough, looking at 680, I wonder if it is 680, because look at how we broke and retest day lows. So right there, I'm going to tweak my level. Isn't that crazy? I said you guys can tweak your levels. I just tweaked mine. I don't got to double check with anything. I see there's a low here. We found buyers. There's a break and retest. We went down. There's my new level. Crazy. I literally moved it 50 cents. And if I have to move it back, great. Doesn't matter. Okay? So pretty cool. Pretty easy to understand. It's really not super complicated. Finding the levels and drawing them out yourselves are going to be the hardest thing. Transparently. So when you are learning how to draw your levels, feel free to DM me, tag me. All I need is you're going to go like Apple, right? Write me the ticker. And you're going to just list off. I see a level here, a level here, here. Give me the levels, right? Write out the numbers. And say, will you check these? Will you give me your thoughts? Absolutely. I'll take the time and draw them out. That's crazy how perfect that was too. Look at that. There's a extreme low. Break and retest under the low. I could do this all day. But yeah, just send me, if you have questions and you want me to proof it or whatever to build up your confidence, it's not a problem. Just give me the ticker, give me your levels. I'll run through them, kind of double check your homework, make sure you're not being a dumbass. And kind of give you my feelings and pointers. So, hope that's cool. That's pretty much it. Got to take the notes now, if you haven't already. So, find pivotal, I don't know how the fuck you spell that, but that's how we're going with it. Pivotal points, and mark a line, then zoom in and find where price does not want to stay. Draw the rectangle. I'm going to say draw the box, because I don't know how to spell rectangle off the top of my head. Start on higher time frames and work your way down. higher time frames have more importance. I would recommend staying 15-minute time frame or higher unless it's to tweak a level. Okay. Pretty self-explanatory, not rocket science, kind of important. Ta-da. Super duper easy. And then tomorrow we have bias and market analysis. We already kind of got the tip of the iceberg with that, so it's going to be a lot of how to use supply and demand, SMTs, liquidity, break structure, and trends to form a bias. So we're making hella progress. Cool deal. Yeah. Got any questions? Let me know. Tag me, DM me, comment. I don't care. Adios, amigos.